Hello, everyone. Ben Bryce, joined by Steve Georgie to give you your Midday Mayhem on Thursday, September 19th. It's been really crazy. We had a really busy day yesterday with the Fed coming out and cutting those rates 50 points, 50 basis points. So, Steve, what's going on today? How does that affect these markets? Are we seeing a reaction, or is this more of a long-term outlook that we could be seeing these grains?
You know what? Honestly, I think it's both, right?
Okay.
When you look at what we've got right now and what the financial markets are doing, strong, 400, 500 points higher in the Dow right now. You got crude oil that's joining the party. That's up over $1 here at this point, breaking above some resistance, above that 20-day moving average.
Huge
But
point of contention.
Yes, it is. But when you look at this, we've seen some of that. So maybe some short covering. And these are markets that have been depressed and starting to find something else, right? So the grain markets, you got corn that was down 6-7 cents already, starting to recover a little bit.
Yeah.
But beans back to unchanged, still fighting their way back. Are we seeing this influence in the grain markets? I'm not sure it's hit it just yet, but I feel like we could see that in the coming days.
Yeah, and when you cut the rates half a point, we haven't seen a cut in, 2-3 years?
Yeah.
And now you just freed up a lot of money. When you start looking at it, what does that mean for the distant macroeconomics in general? Fed's cut the rate. That makes it a lot easier to lend money, to borrow money, to spend money, and takes money that was maybe on the sidelines and puts it back into the market, whether that's in our grains, whether that's in equities in general, or funds, because the funds have been liquidating their positions. So does this Fed rate change mean that the funds are going to stop liquidating their positions? Is that something that, because over the past few weeks, they've been heavy short grains, but now they're starting to buy back. So now are they looking at profits? Are they looking at maybe demand spiking with the weaker US dollar out around the market? Again, one rate cut doesn't mean anything. It's if you can continue to see that. But 50 points is a big move.
I think you got to look at it two ways, right? The perception versus the reality, right? Perception of this, right? What happened? What happened was that the Fed cutting rates. They said they were going to cut rates. They cut rates, and so they did what it is. And so it's this perception that, hey, we can continue to do what we were doing, right? Leading up to this, the grains, like you mentioned, you had some short covering in there, but the facts are this: when you look at the reality we have got, we're going to have a record crop for corn and beans. We're gonna fight over what the yield might be, or maybe what the acreage may be. But the big thing is this: we're gonna have to find a home for it first. Supply and demand, strictly supply and demand. We've got a huge supply going to hit the market right now. What typically happens to price, right? Price tends to decline. I think the funds know that. So they got out thinking, I don't know what the Fed is going to do. I'm not quite sure how that's going to happen. But when you start looking at that across the larger scale, when you look at the reality of what it is, now to your point, the funds could come back in and start getting short again in here because status quo.
Right.
We're continuing stock market new highs, crude oil finding some support. You've got everything's all good again, right?
Right.
Now, whether or not that's really true, that's the way the market is perceiving it at this point. But with a big crop coming in the grains, we got to be careful. We could see the funds come join the short side once again.
And you can talk about demand and how that could come in. If South America has a tight supply, our grain's cheap, whatever, but that's so far down the road. We don't know. Just like we're just beginning harvest, we're getting some early yield numbers from guys out in the fields. Is Brazil going to have a tough planting? Maybe. It's a weather forecast.
It is.
So you don't know. So you can't bank on that, saying that, this poor planting down in South America, that means that demand for us should be higher. Take that with a grain of salt, guys. Again, it's so early on, and a lot of those forecasts can change.
But it does. But the thing to watch, though, to that point, is that when you look at South America as a whole, right? Yes, it's dry. We're still maybe a little bit early from it really mattering to our grains. But the other side of it is that we do have to be careful on is that Argentina brought in some beans. So they bought beans. Now, Argentina doesn't export soybeans. They export bean meal and they export corn. Now, they're bringing beans in order to improve their crush, probably to fill contracts that they currently have.
Yep.
So that demand from South America or from Argentina has picked up a little bit. We do need to watch that. If they're going to go through a struggle over the next 3 weeks and not get the crop in the ground as they should, the idea is that Argentina is going to need to continue to buy beans. That opens up a market and that could boost demand.
Exactly.
So be careful for that.
So keep an eye out for that, guys. And switching over to livestock, that's been a fun one.
Ooh.
And I mean, livestock kind of goes hand in hand over the past few months here with the stock market when that's doing. So with these Fed rate cuts, if we're looking for inflation to come in and everyone's happy, all hunky dory, right? Because everything has to be good.
Oh, it's so good.
Right. Does that mean that cattle's going to continue to go up until it doesn't?
So cattle has been going down, right?
Mm-hmm.
And so I think what we've done is that this idea that everything is okay, don't touch it. And the stock market continues to go. The demand for beef, the demand for high price beef is going to continue. Now lowering rates, it's easier to borrow money. That means more money in the consumer's hands, which means that beef demand could continue or be stronger, right? We're seeing that today. You got the December contract up over $1.50 currently. When you look at that, where are we going from here? Box beef is at a 4-month low,
Right.
And yet the consumer and the retail counter still improving and still pushing the meat prices higher. So maybe we've adjusted prices too low too quick, because last year, September 15th, the markets topped and we had a severe drop in the market.
It went on for 3 months.
And we're now past that.
Right.
So kind of a counter seasonal thing from what we saw last year, that maybe we overcooked this thing and we could see a little bit of a bounce.
All right. So, but keep in mind, if that inflation keeps up and we have all this money being spent and jobs aren't being generated, you sort of see the writing on the wall a little bit, where guys can get a little bit nervous with demand.
Yeah.
Maybe the U.S. economy overall is like, hey guys, everyone's saying we're all spending all this money, but I got all this debt that's picking up.
Mm-hmm.
I'm refinanced, great, fantastic, but my job's not paying me that much. So the macroeconomics factor really focuses on that livestock market. You got to be looking at what's going on with the consumer when you're looking at livestock.
I'd agree with that. Bids so far this week coming in just a touch better.
Mm-hmm.
And so the other boost that we could get out of cattle, though, is that if you look at box beef, right, as I mentioned, 4-month lows, if you get just a hint that, hey, maybe we're just not down, no, it's going to turn and it brings back new demand, right? So that could springboard us back in the upwards direction here if we end up seeing it.
Typical livestock.
Of course.
Shot up and down.
Oh, it moves.
It does move. Absolutely. So guys, thank you for sitting in here with us. Thank you for watching. Steve,
appreciate it
being here.
Thanks, guys.
If you guys have any questions, give us a call. We can really only say so much on these podcasts. So if you want to get specific about your operation or a specific market, we're available anytime. 1-800-2-MARKET. That's 1-800-262-7538. Thank you again for being here, and we'll talk to you guys next week. Have a good one.
Thanks, guys.